Happy snow day from New York City. It's 30 minutes until the start of your cash equity trade. I'm Dani Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up, trade uncertainty rattles markets again as President Trump moves ahead with new global tariffs following the Supreme Court's decision. A powerful winter storm could shatter records across the East Coast, crippling transport networks and straining power grids. Plus, Novo Nordisk plunges, Merck splits up, and Gilead makes a deal. We're tracking a flurry of pharma news out this morning. Let's look at some of those pharma movers, because there are a lot. So Novo Nordisk this morning plunging 15.33%. Its next generation obesity shot, CagriSema, delivered less weight loss than Eli Lilly's rival in a head-to-head trial. We're going to be talking to someone from the C-suite of Novo Nordisk about that deal. Then there's Eli Lilly. 3.5% surge because, that didn't do as well. Also keeping an eye on Merck, up 1/3%, splitting up its cancer and its non-cancer drug unit. They're facing a patent cliff, so that's playing into that. Also keeping an eye on stocks overall this morning. They are decisively down on the uncertainty and a new across-the-board 15% tariff on U.S. imports. The EU is poised to freeze the ratification process of its trade deal with the U.S. following the Supreme Court decision on so-called reciprocal tariffs. U.S. Trade Representative Jamieson Greer told CBS that he expects the trade deal to remain in place as is.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
Let's dig into the trade uncertainty. Joining us now is Anne-Marie Horduran, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Anne-Marie, besides the snowplow drivers, you're probably the busiest person this weekend. Where do we stand now?
Well, where we stand right now is that we still have tariffs. And I mean, that was always going to be the case going into whether or not the Supreme Court upheld IEEPA, should have had the deals that already struck, or were they going to come out with Plan B, which they had broadcasted well ahead of this event. So what we have right now is Section 122 being used. It's never been used before. The administration is using that. They can use it for 150 days, and then Congress would need to get involved. The president started out Friday in that press conference talking about a 10% tariff rate, and then he quickly moved to 15%, but that only lasts for 150 days. So by this summer, by the end of the July, they're going to have more durable tariffs in place, and that's going to require investigations. They've talked about the administration over the weekend, whether it's Secretary Bessent or Ambassador Jamieson Greer, about using 232s or using Section 301. These will require investigations, so they take a little bit more of a longer time. But what is clear is that tariff rates are staying. The big question mark is what happens to the tariffs paid last year that now the Supreme Court has deemed basically were illegal? Do those companies that lined up, do they get refunds?
And I guess that would make a big difference to the fiscal picture for the United States and deficits. What about individual trade deals? I mentioned what's happening with the EU. Are we just at a standstill now?
I think it depends about which country we're discussing. So I did talk to a lot of foreigners over the weekend, and basically they were told what we were told, that if the Supreme Court was to strike down IEEPA, the administration would come back using other provisions to enact their trading policies. So a lot of these trading partners don't really think a lot has changed. I think there's going to be some key countries to focus on, places like the United Kingdom, places like Australia, where their deal was under 15%, which is under the current rate right now the president has enacted using Section 122. What happens with those trade deals? And of course, with the European Union, it sounds like they just want to seek some clarity right now. And then the big one is going to be China. Does this change any of the negotiations when it comes to China? Ambassador Jamieson Greer said no. This is really just about a check-in of the relationship, making sure that China continues to buy U.S. agricultural goods, continues to buy Boeings. They continue to ship off rare earths into the United States. But definitely is going to change some of the contours of the discussions because the tariff rates have changed, even though, as Leland Miller of the Beige Book, the China Beige Book, put it to us this morning, they're not collapsing.
What do you think Congress's reaction will be to this, especially Republicans who are facing a midterm in 3.5 months?
Well, it depends which Republican you ask. So over the weekend, we did hear from Representative Don Bacon. He was talking about how this is not good politics or policy. And then you heard from others, like Senator Bernie Moreno. And he was talking about the fact that Congress should actually just let the president use IEEPA, put that into reconciliation to give the president that broad swath of authority. It was very clear if you read through the opinions from the Supreme Court justices, especially when it came to Justice Gorsuch. He talked about this idea of really presidential power and how, unless it's specifically detailed, outlined, a lot of this lays in the hands of Congress. So it's up to them to adjudicate. But is Congress really going to want to do this, as you say, with a midterm election year, when the latest polling on tariffs from Ipsos, Washington Post, and ABC show that 64% of Americans really don't like the tariff policy?
Anne-Marie, thank you so much for all of your coverage, both Friday, the weekend, and today. Anne-Marie Herdern of Bloomberg Surveillance. And in the next hour, corporate America reacts to President Trump's new tariffs. We're going to speak with the CEOs of Mazda North America and Freeport-McMoRan. Now, elsewhere, a lot of distraction this morning. 41 million people along the U.S. East Coast are grappling with blizzard conditions this morning. Let's get right to ABC's Lionel Moise here with the latest, who has yet to turn into a snowman, but maybe working on your way there. Lionel, what is the latest with the weather? Is it picking up? Does it seem like it's getting worse at this point?
You know, every time I check in with you guys, it seems like it's getting worse. We did get a little word from the meteorologist that it is going to start getting better. We were told by the afternoon things should be better, but the snow is thick. It is still coming down. It has been very windy. Right when you think you get a break, you're knocked over again. Maybe I'm not a snowman, but I feel like I'm in a live snow globe. They have been working to clear this sidewalk behind me for the last 8 hours, and you cannot see the color of the concrete. So that just shows what has been going on. We are still in that travel ban here in New York until noon. New Jersey also extended their travel ban until noon to keep people off the streets so they can work on clearing them.
Yeah, Lionel, I know it's unpleasant conditions out there, but it is kind of beautiful. You're right, it does look like a snow globe. What about for the week to come? Things still look treacherous today. They're still trying to clear up, but does it look like things like flights, transportation, that might resume come Tuesday?
I wish I had better news. So right now we know that there are 5,000 flights canceled today. There are about 5,000 canceled tomorrow. I usually would say, okay, so the day after things are going to be picking up, but there is more snow in the forecast for this week. Nothing like these blizzard-like conditions, but hopefully that will not be a hindrance to people who are still trying to get out, because it's not just customers who need to get to their destination. The flight attendants and the pilots could also be stuck in this storm as well.
Lionel, thank you for braving the conditions for us. That is ABC's Lionel Moise. Let's get back to markets this morning. People taking Novo Nordisk's next-generation obesity shot lost an average 20% of weight loss. That compares to 23% for Eli Lilly's equivalent drug. Let's discuss with Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, just how big of a blow is this for Novo?
Well, you see, about 30% of revenue or growth over the next 5 years was supposed to come from this drug when you look at analyst forecasts. So it's a big blow. And at the end of the day, you know, Novo rolled the dice. These companies do head-to-head comparisons just to prove their relative efficacy and side effect profile, and it didn't work out for them. And the thing is that it showed it to be inferior. A lot of the times there's so much overlap between the data that you can't call it better or worse. Here, it literally came out, they couldn't hit the non-inferiority, which is not a good story for them. Perhaps Novo needs to now think about M&A more.
What targets might they look at, Sam? Because we've seen M&A tried and failed in this industry and battles over individual companies. So where does Novo turn to next?
Yeah, so the one thing Novo did not do is follow Lilly in this class of drug that they developed. Remember, I keep reminding you, there are two mechanisms of action in Zepbound, tirzepatide. Novo did not follow that route. There are lots of companies who have compounds that are similar to tirzepatide. Maybe one of those would be a potential partner or future target for potentially Novo Nordisk. There's also many companies that are developing completely new ideas along the way for obesity, muscle sparing, etc. Those are the areas that perhaps Novo needs to look at to gain some competitive strength again here.
There's also just a flurry of various deals and corporate restructuring. Sam, we learned from Merck this morning that they're going to be separating their cancer non-cancer unit. Gilead is making a purchase, too, of a biotech company around cancer treatments. How much of all of this action, Sam, is just about a patent cliff that a lot of these pharma giants are facing and grappling with?
Yeah, so as you know, or maybe you don't, we recently published, my colleagues Ord and Vinay Hamilton recently published a very deep look at the patents for Merck's Keytruda, the big drug that's supposed to come off patent by 2029. And they find that Merck can protect it to 2033. So maybe the move that Merck is making is to clarify its business such that it's reporting slightly different, the oncology business, etc. But I think this is more to do with the fact that the pipeline of drugs that they have coming are becoming so complicated, so diverse, that it's the right thing to do for the company to focus on oncology and the other disease areas separately. The other company that does this has been very successful is AstraZeneca, so that's nice to see. Gilead's story is a little bit different. Gilead is buying essentially its partner, and it's doubling down on this bet of treating multiple myeloma with these cell therapies. And there's only currently 2 companies that are potentially, I mean, one's on the market, which is Johnson & Johnson. The next one could be these guys within the next 12 to 18 months.
Sam, thank you so much for this. Sam Fazeli from Bloomberg Intelligence. And later this hour, we will be hearing from Novo Nordisk's Chief Scientific Officer, Martin Lange, so stay with us for that interview. Let's get a check on futures, about 20 minutes away from your trading day, and we are down 1/3 of 1% despite a positive week last week, 0.5% for the Nasdaq 100. We finally saw gains for the Nasdaq 100 for the first time in 3 weeks, but it's the tariff fears, the uncertainty. Will companies get paid back? Are we staying at 15%? What happens next? Let's get a look at some of the other movers on our radar this morning. Domino sales topped estimates as budget-friendly prices lured consumers. And I would note, our Bloomberg News team saying it was the stuffed crust pizza that sent them over the edge. I've not tried it myself, but I'm sure that is the reason sales are doing so well, up 6%. Meanwhile, the Justice Department is looking into Netflix's $72 billion proposed merger with Warner Brothers. It's investigating whether Netflix wields anti-competitive leverage over creators through the deal. And then international paper, that is falling after a global report which showed that the prices of paper or prices being able to pay were tumbling. So a lot of its peers falling too, those shares down 7.4% in the pre-market, analysts noting a slowdown in demand. Coming up, the president hikes tariffs to 15% after a Supreme Court setback. Missouri Representative Jason Smith, the chairman of the House Ways and Means Committee, will join us next on what Congress has to say. Stay with us on Open Interest. Let's get to high interest. A look at what's making headlines around the world. Mexico says it has killed Jalisco cartel leader known as El Mencho in a U.S.-backed raid seizing heavy weapons and rocket launchers. The strike triggered nationwide road blockages, shootings, and flight suspensions. Washington praised the operation while urging Americans in affected areas to shelter in place. Private markets flashing stress. Bain says private equity is in its worst dry spell since 2008, with $3.8 trillion in unsold assets and payouts near 16-year lows. Now, elsewhere in private credit, Blue Owl has frozen a $1.6 billion private credit fund and is selling assets to meet redemptions. That has rattled a $1.8 trillion market and revived liquidity fears. The European Parliament is sent to freeze ratification of its U.S. trade deal, the bloc demanding clarity after President Trump's new 15% tariff. The move follows a Supreme Court ruling limiting his emergency powers. EU leaders say approval can't move forward amid growing trade uncertainty. Let's stay on tariffs, and I'm joined now by Missouri Representative Jason Smith, who also serves as the chairman of the House Ways and Means Committee, and he is the chief tax writer in Congress. Chairman Smith, thank you so much for joining us this morning. Let's start with the elephant in the room. The tariffs were a big source of fiscal revenue for 2025. Do you anticipate that all will get refunded? And if not all, much of it will get refunded now?
To say that the tariffs were a significant impact of revenue is to say it lightly. In fact, it has been projected by the Congressional Budget Office that the tariffs that were in place would reduce the national deficit by $3 trillion. And that's pretty substantial. However, the Supreme Court decision is not going to affect the revenue that's coming in for the most part, because under a lot of the federal trade statutes in regards to unfair trade, whether it's Section 122, 301, or 232, the president is going to be able to levy his authority to implement virtually the same tariffs that were in place under IEEPA that the Supreme Court threw out.
Sure, but the tariffs that were implemented through IEEPA, Representative Smith, is it your message maybe to corporate America that if they've joined this lawsuit that maybe they shouldn't be expecting the tariff refunds? How do you expect that to play out?
You know, it's really unfortunate that the Supreme Court was crickets when it came to their very large opinion, but they didn't even address this. So, of course, now it's going to be reprimanded down to the lower courts. They will make those decisions, but it's going to be a process that's going to take 3 to 4 years probably before it's addressed.
There is this question of uncertainty. That's certainly one of them, Chairman Smith, what's going to happen with the refunds. But then there's this other lingering uncertainty of having a president who first announces 10% tariffs and then 15% with Section 122, which can only be in place for a limited number of days. How is this helping uncertainty in corporate America? Do you think that there could have been an argument to just said, okay, the Supreme Court has made its decision and we carry on as is?
You know, certainty is great for the economy. That's why we passed the big, beautiful bill, the Working Families Tax Cut, 6 months early to give the certainty to those small businesses, those big companies. But in regards to the tariffs, I think it's very certain. There's probably not going to be any refunds. I don't see a pathway in Congress that there's going to be refunds. And so you're going to look at over the course of President Trump's administration, he's going to continue to use those tariff revenues to bring down the deficit.
There is another matter to this, though, and it can easily, and many people have framed this as simply a consumer price hike. Representative Smith, do you expect that all of the Republicans in Congress will be behind this when we're just 3.5 months away from a midterm election where affordability is on the ticket?
I think it's very important to understand trade policy just as a whole of where it is with all Americans, but also all members of Congress and the United States Senate. It's a deeply divided issue, whether you're Republican or whether you're Democrat. There's not a uniform opinion of one party. In fact, you have Democrats that agree with Republicans and Republicans agree with Democrats on various aspects of whether they're pro-tariffs or they're anti-tariffs. So if something moves forward from a legislative perspective, it will have to be bipartisan, because it is such a bipartisan division when it comes to those different items. But let's look at what tariffs have done. We have the lowest trade deficits since 2009. And when you refund tariffs, you're refunding money to corporations that benefit by purchasing products outside of the United States. Who benefited from tariffs was U.S. manufacturers and U.S. farmers.
So to be clear, are you and your colleagues working on legislation right now to codify tariffs?
We've been working on trade legislation throughout my 3 years as chairman of the Ways and Means. If you just look at most recently in the last month, we reinstituted and extended the Haiti and the AGOA trade preferences program. So we're in the middle of all the different trading aspects. If you look at the big, beautiful bill, we addressed de minimis when it came to China and other packages coming in the United States. We're going to continue to do so.
Tariffs or not, the debt is still exploding because, in large part, the one big, beautiful bill, Representative Smith. Are we done cutting the deficit? Is this it for now?
We can't be done cutting the deficit. When you look at a national security threat, it's definitely our fiscal house. When you're looking at approaching $40 trillion in national debt, we have to be looking at ways to trim the budget 24/7.
So are you then, with all of this, disappointed in a lot of your Republican colleagues? There have been some, Senator Paul, Representative Bacon, who publicly applauded the Supreme Court ruling. Representative Smith, it doesn't seem like there's cohesion at this moment.
Well, Senator Paul didn't vote for the big, beautiful bill either. So there's always division within the Republican Party. But guess what? There's bigger division in the Democrat Party because Hakeem Jeffries is not even the minority leader of the House. His liberal base affects all of his policies, his decisions. That's why we're in a government shutdown right now with the Department of Homeland Security and why they're not funding TSA agents in the airport, why they're not funding FEMA, and why they're not funding the U.S. Coast Guard.
Yeah, there was a lot of backlash this weekend about a brief decision to shut down TSA PreCheck. Chairman Smith, where do we stand on funding the Department of Homeland Security? Is there any movement?
There has been zero movement from what I have seen. The Democrats are demanding unrealistic expectations and solutions. They're the ones who shut down government. They need to come back to the table and make sure those TSA agents, the Coast Guard, the Secret Service, FEMA, that they have paychecks.
There still has been just mass outrage about what's happening with immigration and with ICE. Representative Smith, where would anyone budge on this? How does it come to a solution?
Well, what doesn't make sense is that they say they want to defund ICE, but guess what? ICE was funded for 4 years in the one big, beautiful bill. So by shutting down the Department of Homeland Security budget, that does not affect funding of ICE. ICE is continuing to be funded because we did it for 4 years. So it is absolutely only politics of why the Democrats are shutting down government. They say that they're doing to defund ICE, but they know that they're not defunding ICE by shutting down Department of Homeland.
Some of the polls, though, have moved in the wrong direction for this administration, be it on things the president ran on immigration, on this economy, on affordability. Again, 3.5 months away from the midterms. Is this an administration and a party, a GOP, that risks losing control of the narrative?
Anyone can find a poll that favors their narrative. There's no question about it. What I will say is I was back home in my congressional district all last week, traveling throughout my 28 counties, and people were very supportive of the president's immigration policies and securing the border. And the fact that 3 million people illegals have been deported or voluntarily left.
I still think some of the images coming out have shocked people. But all this said, Representative Smith, there are a lot of issues that this administration now needs to tackle, especially in light of Friday's ruling. What are you expecting for the President's State of the Union address tomorrow?
I think the president's going to highlight what he's done in his first year in office, which I believe what President Trump has done in his first year of office is more than what most presidents do in 8 years. When you look at securing the border, which we just discussed, creating the largest tax cut in U.S. history and fulfilling his campaign promises of no tax on tips, no tax on overtime, tax relief for seniors, increasing the child tax credit, creating the Trump investment accounts, making 100% expensing of new factories. You've seen more than $10 trillion of investment come back into the United States. We have the lowest interest rate in 5 years, the lowest gas prices in 5 years. And guess what? The murder rate in the United States is the lowest since 1900. These are huge successes. But when you look on the foreign stage, the president has eliminated 8 different conflicts. So I think that's a lot of success that some presidents would be begging for.
Although there might be another conflict brewing with Iran, or at least an escalation, which also might undo some of the work in gas and oil prices. Representative Smith, we're going to have to leave it there. Thank you for joining us. Representative Jason Smith, chairman of the House Ways and Means Committee. Coming up in the next hour, we're going to have more on corporate impact of trade uncertainty. We'll be speaking with 2 CEOs of Mazda North America and Freeport-McMoRan. But a quick check on your futures this morning, because there are some nerves playing out. We're down about 0.25% for the S&P. The Nasdaq falls 0.4%. While Russell 2000 futures, it is the small caps that are underperforming, down 0.5%. More to come. You're watching Bloomberg Open Interest. Moments away from the start of trading, you are watching Bloomberg Open Interest. I'm Dani Berger. Matt Miller is off today. It is a snow day. We're down 2 0.2% for the S&P 500. The Nasdaq 100, that underperforms, down 0.4%. The Russell 2000, that also underperforms. A lot of this is based on the uncertainty over the weekend of ramping up of tariffs from 10 to 15%, which is the highest amount that you can do in Section 122 tariffs. Here, we have a construction group, ConExpo. I have to say, I am so impressed about both the New York Stock Exchange and the Nasdaq. Look, it is a full crowd, and it is a snow day. These people had to trudge through mountains of blizzards, so well done to you. It is the Association of African American Financial Advisors ringing the bell down at the Nasdaq. So congratulations on multiple fronts. Let's get to your stocks to watch this morning. Look at what Novo Nordisk is doing this morning. This is the ADRs, down more than 15%. Its next generation obesity shot delivered less weight loss than Eli Lilly's rival in a head-to-head. So you can see Eli Lilly is ramping up off the back of that. Merck down slightly, not a lot of action. It is splitting its business into two units, a cancer drug unit and a specialty non-cancer drug unit. We're also keeping an eye on the majority of stocks this morning. Again, it is this uncertainty. You can see a lot of the consumer companies, Gap, down 2.5%, because now we have across the board 15% tariffs on U.S. imports. The European Union is poised to freeze the ratification process of its trade deal with the U.S. following that Supreme Court decision on so-called reciprocal tariffs. Let's bring in Bernstein Private Wealth Chief Investment Officer Alex Chaloff on all of this. Alex, what has changed for you in your 2026 outlook, given Friday's ruling by the Supreme Court and the tariffs announced by this president over the weekend?
I think uncertainty is the new word, Dani. I think chaos would be an extreme, but certainly uncertainty is something that we have to live with, where we and others had planned out for a specific set of tariffs and the ensuing fallout from that. At least we were able to plan for it. Now everything's up in the air. There was 10% on Friday, there's 15% on Saturday. There's a lot of discussion over the weekend. So we all just have to live for this period of time with some level of uncertainty.
And I heard from companies over the weekend just this absolute scramble. If they've joined the lawsuit, can they get the refund? What does that look like? How do you assume corporate America behaves in this moment? Do we see stockpiling again? Do we see holding off on CapEx plans, especially for those that are affected by the tariffs, Alex?
I think that Dani, the most likely is the last part of what you just described. This holding off on CapEx. We've already seen it. We've seen it play out in hiring plans and the slowdown in hiring. We've seen it in other than the AI hyperscalers in a lack of commitment to spend real dollars until tariffs policy is known and codified. So I think joining lawsuit, not joining lawsuit, I think that's less important, frankly, than this idea of how much of a pullback are we going to see in CapEx.
There have been, in the meantime, a lot of calls to look abroad for equity gains, Alex. Citi had a downgrade to U.S. tech stocks not that long ago, just last week. Hedge funds have been net sellers of global stocks at the fastest pace since the tariff meltdown. There does seem to be this feeling of maybe this is another year of outperformance internationally. Are you seeing the same thing?
Yeah, a big part of the outperformance internationally came from a weak dollar. I mean, yes, Europe did better than expected in 25, Japan, Asia, and we would expect continued earnings growth out of those markets. But it's really the tailwind from the weak dollar has driven that significant outperformance. If I were to look at the crystal ball for the end of the year, yeah, I think this is a year that non-U.S. will do well. We've had clients allocated there for the last number of years, and so look forward to turning the tide. You'll recall that for the 15 years before 2025, U.S. outperformed non-U.S., so there is a little bit of a valuation trade there as well. But yes, I think non-U.S. markets will do quite well this year.
Alex, if I was mean, I would probably ask you what's going to be more impactful and disruptive, AI or tariff policy, but I guess at this point it's maybe impossible to know. But okay, so you have AI, disruption, also bubble fears, also tariffs, also is there going to be a conflict with Iran? Alex, how are you just thinking holistically about markets right now when it feels that left tail every day is just getting that much fatter?
Dani, you can't be mean. That would be I also
Appreciate
would
it.
throw into that blender of issues that we're working through the private credit market.
True.
And what's going on there. So look, I think you've got to take a step back and say, what do you own? Why do you own it? Have there been major disappointments to derail any of the investment theses for any of the asset classes that are available to you? And the answer in large part is no. The AI trade is still on. I think the hyperscalers continue to do well. That whole AI ecosystem, whether you're talking about the picks and shovels or the data centers or whatever part of that, still working. And I think you'll continue to see companies spend there in meaningful fashion to drive future profits, certainly not near term. And we could argue about the relative benefits of taking money out of the pocket of current projects and pushing it to AI. But this is nothing unusual. I mean, it's never been easy. There's always been global conflict. People say, what are you doing about the Middle East? It's like, well, we always have the Middle East to worry about. We always have oil prices to worry about. So while the headlines might be more fast and furious today, I think the issues really are quite consistent with what we've had to deal with over history.
And to be fair, when it is easy, people freak out. That money's too easy anyway. So maybe, we're not satisfied regardless of what things look like. Alex, if I could just linger on the private credit for just a moment, because as overseeing the money, overseeing so many different clients at Bernstein Private Wealth, how are you approaching that with clients? Are you getting a lot of questions about private credit? Are there fears in there? Is that an allocation that you'd recommend for a high net worth individual?
I'm going to say yes to basically everything that you said. Yes, there are concerns among our clients. Yes, we have our concerns. The news of the last couple of weeks, it wasn't just the big announcement last week and the ensuing desire to buy at fire sale prices some of these loans that may or may not come to the market. But there have been a couple of high-profile, sizable deals that have gone sideways in private credit at the end of 25 and into 26. So this is an area that requires extreme vigilance. It really comes down to underwriting. Boring is better here. Having an ability to sort through the types of fundamentals that you would expect in the public markets is even more important in the private markets. And I think what we've seen from some of the failures when you really step back is that this flood of capital that's come into private credit over the last 5-6 years has forced a lot of private credit players to make deals that they otherwise would not have done if not for the fact that they had all this capital on the sideline that they had to invest. And so I think you want to invest with a group that isn't in a rush. Thankfully, the team that we have in place within AB has done a terrific job of managing through this, and patience will win here. I think a lot of the deals that we may have, air quotation mark, lost a couple of years ago because we weren't willing to bend on covenants or bend on coupon, we're going to see them back again, coming around the other side at a deep discount, and that's okay with us.
Hey, Alex, this was just so fantastic. Thank you for joining us. Hopefully you're staying warm and snow-free wherever you are in the world. Alex Chaloff of Bernstein Private Wealth. Let's get a check on your equity markets this morning. 8 minutes into your trading day. Ooh, we are just barely putting in gains, but that's good news because we ended the week higher last week. Maybe we can do it again this week. Volumes are probably off. A lot of people not at their desks this morning. We are going to be getting NVIDIA earnings this week. That is the other big thing to put in the blender, as Alex so wonderfully put it, of risks concerning us. So NVIDIA shares are up 1.6%. Eli Lilly also putting in strong gains after a Novo Nordisk trial, a head-to-head trial, did not have as strong as results from Eli Lilly. On the downside, also has some tech companies in here too. Microsoft is down, Amazon is down, Tesla too, and Palantir off 5%, as is Netflix, concerned over the DOJ looking into that deal with Warner Brothers Discovery. Let's look at how the sectors are doing this morning. A pretty even split between gainers and losers. Energy is doing well. There's a Supreme Court. We'll hear a case on oil giants when it comes to climate issues. We'll get more details on that for you, but energy stocks surging this morning. We're up by 1%. Healthcare, utilities, real estate. So even though it's a positive day, it's a lot of the safety sectors that seem to be doing better. Consumer discretionary at the bottom of the pile with those tariff concerns. 10% becomes 15% in Section 122 tariffs. Coming up, I mentioned it, we're going to discuss Novo Nordisk's newest obesity drug with the firm's chief scientific officer. Stay with us for that interview. Coming up next on Open Interest. Time now for some top calls. The analyst action that we are following. First up, Jefferies cuts Deere to a sell, saying the stock already reflects a full recovery in farm demand. The firm also warned that higher costs, trade uncertainty, and heavy debt could hamper the company's recovery. Next up, Wells Fargo, they upgrade Alphabet to a buy, calling it an AI winner with strengths in consumer data, distribution, and compute capacity. Shares only up 0.2%. And finally, Bank of America downgrades General Mills, saying its recovery story is not playing out. The firm says hopes for a pet rebound and steadier sales have stalled as shoppers pull back. Elsewhere, Novo Nordisk's next-generation obesity shot, CagriSema, underperformed Eli Lilly's tirzepatide in a head-to-head trial. Let's bring in Novo Nordisk Chief Scientific Officer Martin Holst on this. Martin, thank you so much for joining us this morning. And I just want to bring you a comment from a shareholder of Novo Nordisk, of Global Health Invest. Novo Nordisk's opportunity to make a comeback in the fight against Lilly, this was it. This obviously weakens them in a fight. What would be your message to those who believe the same thing, who have looked at this study and said, now this means Novo is falling even further behind Eli Lilly?
I would answer, it's been a few years since we designed the Redefine program, the program to show the weight loss potential of CagriSema. We already last year learned that to really see the true weight loss potential of CagriSema, it is a very powerful combination of two molecules. We need to have what we call a bespoke titration algorithms to really allow patients to titrate the very powerful treatment in the way that they prefer. We could see from the first study that that could be further optimized. In this setting, we could not manage to implement those learnings in what we call Redefine 4, which is the study that we discussed today. So the jury is still out of what can CagriSema actually achieve. In the study that read out today, we saw a 23% weight loss with CagriSema. That is actually very substantial. And it is among the best weight losses that we've seen, also amongst drugs in the market.
Right. Of course, just sort of the sore point in that, if I can jump in, Martin, is just the comparison to Lilly. It will forever be there. So what is the plan then to catch up with them?
Yeah, exactly. So first of all, the 23% weight loss that we saw with CagriSema is in line with what we've previously seen. The 25%, which we saw with the comparator drug, is actually the best data that has been seen so far in similar trials, which is a little bit surprising, but it stands alone in terms of that 25%. But we've also taken a lot of learnings in terms of how we can improve the titration for CagriSema. We've implemented those learnings in a study that's currently ongoing. That study is called Redefine 11. And we've guided for the last year that only when we see those data do we know the full weight loss potential of CagriSema. Furthermore, we are initiating during this year phase 3 studies to investigate even higher doses of CagriSema. And then obviously we have our very competitive pipeline, starting with semaglutide that starts phase 3 this year, but also our 2 triagonist that is currently in phases 1 and 2. So I think from a short but also a longer term perspective, we have a very competitive portfolio and pipeline.
Martin, on that pipeline, you seem confident on it. Would you like to see that bolstered by some M&A, by bringing in organic growth to the pipeline too?
The way we think about this is that obesity is a very complex disease, and obviously we want to have drugs that provide the biggest weight loss, but we also want to have drugs that gives as few side effects as possible. Then we also want to have drugs that provide comorbidities, and to an extent in our current portfolio we have all of that. We also have the best-in-class oral already on the market in the US, and the semaglutide offering that is starting phase 3 will have both a subcutaneous and an oral offering with what we believe will
Martin,
be best in class.
why within that did you not follow Lilly with the tirzepatide and develop a GLP-1 GIP? Why not go down that route when so many other companies did?
We need to follow our philosophy when we do development. We also want to, we always want to see differentiated weight loss potential or efficacy potential, but also differentiated safety and tolerability. We do believe that we will see that when we see Redefine 11 in terms of weight loss with CagriSema. But we also believe that we have that potential for amycretin, which is another version of addressing two biologies. So you mentioned GLP-1 GIP. Sanagemtide is GLP-1 plus amylin. And then we have what we call triagonist, which is basically the next level. We do again believe that that is going to be a very competitive offering individually, but specifically as a portfolio.
Okay, Martin, we're going to have to leave it there. Thank you so much for joining us today. That's Novo Nordisk Chief Scientific Officer, Martin Holst Lange. I want to bring you some breaking news just crossing the terminal now. The EU has frozen the U.S. trade deal approval. That's over uncertainty about where things stand after this most recent Supreme Court decision. We had reported on it earlier this morning, so it is a confirmation that the EU will be freezing the confirmation process, the approval process of their tariffs. They've been aiming to ratify the agreement in March. It was already a difficult conversation, and now the Supreme Court decision throwing that even more up in the air. So that approval process has been frozen. Coming up, we're going to bring you the details from the Justice Department's investigation into Netflix's takeover of Warner Brothers. Ed Ludlow is going to join the show coming up next. Let's get a check on your equity market. Welcome back to Open Interest. I'm Dani Berger. Matt is out today, hopefully safe and not stuck in a snow pile. The S&P down 0.2%. The Nasdaq falls 0.4%. What's causing us to drop more? We were kind of positive. The president putting out on Truth Social, basically saying he has the power to implement tariffs. It doesn't need to go through Congress, being very forceful in those countries that are pushing back against him. Russell 2000 falling 0.4%. Bloomberg dollar, that's also weaker this morning. Again, the trend had been mixed, but now it's getting more forceful. NYMEX crude, Matt Maley of Miller Tabak sending me a note saying, we're not paying enough attention to what's happening with Iran. That, yes, rightly, we're paying attention to AI and tariffs, but that is still one to keep your eye on. NVIDIA, those shares up 1.8%. We will get earnings from them this week. Salesforce diving. Morgan Stanley downgrading Salesforce. That falls by 4.2%. And look at some of these energy stocks are the best performing sector. ExxonMobil up 2%, Suncor up 1%. They're getting a boost from the Supreme Court. They're going to hear a challenge on climate change lawsuits. And then there's Netflix and Warner Brothers Discovery. So today is the deadline for Warner Brothers to give Paramount to submit its best and final offer. The Trump administration is also going beyond a standard review in the Justice Department's probe into Netflix takeover of Warner Brothers. Bloomberg has learned that there are some developments there, and so let's go to Ed Ludlow, who has been watching it. Ed, what is the latest in the Justice Department's involvement with this planned deal?
Yes, it's a probe that's inclusive of a review of the merger, but also a specific look at anti-competitive behavior. The reporting is based on a civil administrative demand, an administrative subpoena that sources tell us went to an independent film or movie studio. And basically, in this document that Bloomberg reviewed, they are citing both the Clayton Act and the Sherman Act. Those are two important pieces of legislation in parallel, because the Clayton Act is something that's invoked, and there's precedent for it in the context of a merger, right? And so when you said a moment ago that it looks like the DOJ and this administration is looking broader than just a standard review, it's the Sherman Act part that this document invokes that would suggest that, because it's essentially used historically to look at the behavior of one single entity, one company, in a monopolistic fashion. And just last week, when Ted Sarandos was on the network talking to me and Lucas, you know, the co-CEO of Netflix, his main argument was what is happening right now is standard. The DOJ is just going through the standard procedures which are legislated for. This latest reporting would suggest it goes far beyond that.
What difference does it make then to also have the president in a Truth Social post on Saturday evening talking about Netflix needing to fire Susan Rice from its board of directors, saying or else? How would Netflix interpret such a threat, Ed?
Yeah, I mean, well, how would Netflix interpret such a threat? I mean, again, going back to the conversation with Ted Sarandos last week, his view was that this is a completely apolitical, non-political scenario. Right. The history with that, of course, with Susan Rice is she made some comments on a podcast that basically corporate America and any other entity that is following the direction of the president, does so knowing full well what it's doing. And that's what the president was reacting to. Both of these stories, the subpoena that we've reported on in the wider probe and the relationship with the president suggests that this is not straightforward. At a minimum, the process and review, pending whatever happens with Paramount and the waiver deadline today, it's going to go on for weeks, if not months.
Hey, Ed, we only got a minute here, but I'd remiss if I let you go without just setting expectations for NVIDIA earnings on Wednesday. Where do they stand?
Yeah, we prepare, brace yourself. I mean, this is a stock that's now trading at 24 times forward earnings. Its 5-year average is 38 times. It has fallen in each of the last 2 earnings reports. The stock is up about 3.5% year to date, having jumped triple digits on an annual basis in the last few years. Everyone is kind of like, momentum's gone, and it's a very high bar to clear to keep this market going with it.
All right, Ed, thank you very much for that. Ed Ludlow in San Francisco, who we are looking forward, as every day we are, to your 11 a.m. Bloomberg Tech Show. Coming up here on the next hour, more on market uncertainty with PNC's Amanda Agati. Plus, we'll talk Trump tariffs with Mazda North America CEO and the CEO of Freeport-McMoRan. We're 30 minutes into the trading day with a blizzard of snow, of tariff news, all weighing on this equity market. Welcome to Bloomberg Open Interest. I'm Dani Berger. Matt Miller is off today. Coming up, trade uncertainty rattles markets again as President Trump moves ahead with new global tariffs following that Supreme Court decision. Corporate America reacts to President Trump's new tariffs. We're going to speak with the CEOs of Mazda North America and Freeport-McMoRan later this hour. And Blue Owl selloff is deepening fears about liquidity risks and excess in the $1.8 trillion private credit market. We begin, though, with economic data crossing just now both durable goods orders and factory orders. Let's break down that data. Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. Mike.
Good morning. We do have the latest durable goods orders and the total on factory orders. Factory orders in a headline basis are down 0.7% after rising 2.7% in November. This is December data. Durable goods orders down 1.4%. That was the same number as in the advanced report. And capital goods orders, non-defense ex-air, the stuff that goes into GDP, is up by 0.8%. That's better than the 0.6 that was reported in the initial report. So going into December, at least manufacturers' orders were a little bit stronger than anticipated, as were shipments, non-defense ex-air shipments up 1%. That compares with a 0.9% number in the initial rating. So I don't know if it's going to be enough that will make a difference when they revise GDP, but it does suggest that there's still some strength in manufacturing, maybe a little bit, not a lot.
Mike, you're also down there in Washington, D.C. this morning at the NABE conference, the National Association for Business Economics. I was looking at the agenda earlier this morning thinking, what is Mike up to? And it seemed like there was a lot of maybe AI in there. How much is the conversation now just completely getting dominated by the Supreme Court decision on tariffs and IEEPA?
Well, interestingly enough, tariffs have sort of taken a little bit of a side route here in that there's still a lot of confusion about what's going to happen with tariffs And that's the general conclusion of economists so far, is we can't say, because we don't know when the new tariffs will come on other than this 15% level, and we don't know on what industries they will be placed or what countries. So we just kind of have to put that off to the side. Chris Waller, the Federal Reserve governor, said that he's going to give a speech on it tomorrow, but he basically said it isn't going to change much in his thinking, because what happens is the Fed is supposed to look through tariffs, so it will mean they just have to look through whatever the new tariffs are, assuming that there'll be a one-off increase in prices, and then it will start to fade as an inflation concern.
Hey, Mike, thank you so much for joining us this morning. Looking forward to your continued coverage of the conference. Bloomberg's Michael McKee in Washington. Now, it's a busy week ahead for markets this week. Let's break it down, because tomorrow we're going to get retail earnings picking back up. Home Depot will be reporting results. Then the president will be delivering his State of the Union address. Wednesday, more earnings from Lowe's, TJX, and the big one, NVIDIA. Then Thursday, U.S.-Iran talks resume, plus another round of jobless claims, plus results from Dell and CoreWeave. Finally, on Friday, we'll have U.S. PPI data. So how are we bracing for this week? Joining us now is Amanda Agati, Chief Investment Officer at PNC Asset Management Group. Amanda, it's like all of the things that we're worried about coming to fruition this week. From AI with NVIDIA earnings, we'll hear from the president after the latest Supreme Court ruling, and then there's the concern over U.S. and Iran. How are you thinking about all of these risks that are ever present for the market?
It's a great question, and it's always great to be with you. Good morning. I'd start by saying the purple haze of policy uncertainty is really the thing that's looming large. When you think about, fiscal policy, certainly the tariff news, we can talk about how the market is kind of working through that in real time. Certainly what the Fed is going to do or not do as a function of the Supreme Court's ruling. We got the midterms later this year. And of course, you called it out, but, the conflict potentially with Iran. So all of these things, the sum told addition of these things is really the purple haze of policy uncertainty. We continue to think it is the most important thing driving markets. And I think it's just going to be a choppy, volatile week. We've started to see volatility pick up as we came into 2026. It really hasn't been anything to keep investors up at night, even though there's been a lot of choppiness. And I think this is just going to be another choppy week.
Yeah, I mean, if for anyone who thought 2026 would be more chill has been deeply mistaken, Amanda. Where do you look for protection? Where do you look for safety when it does feel like you get a sell-off, be it in oil stock volatility or AI-affected assets or those that are pricing in tariffs? Is there any corner of this market that you feel confident that you can hold and be long right now?
It's a great question. And no, we did not think it was going to be a chill year at all. Purple haze did not equate to chillness in terms of the technicals there, not at all. I think our best advice coming into this year is really to stay diversified. It's a boring piece of advice. I recognize it, but this is an environment where investors really need to stay nimble, not stray too far from long-term strategic targets. I think we will have some opportunities as the year unfolds to get a little bit more tactical. Maybe some of these market swoons as a function of the purple haze will give us some opportunities, but this is a pretty fairly valued, now maybe fully valued, but not frothy market. And so I do think it's harder to place big bets in this environment with all the haze continuing to swirl.
So again, I want to get to all these bits of the haze because there's a lot of it. Just to go to the AI piece, I'm looking at a headline right now about OpenAI striking a partnership with consultants. Accenture is now down 2.5%. CapGem is down 2.4%. Do you think some of that is overdone? The AI headline comes out, you get a certain sector or subsector selling off. Are you looking for any opportunity to buy in that selling, or do you want to back off and see how it plays out?
We definitely don't want to back off, but we're tactically overweight exposures both in the U.S. and abroad for all things AI, automation, and robotics. So we are very, focused on the secular trends. It's very early innings from our perspective. So I wouldn't be backing off, but I would be looking for, some air pockets of opportunity to back up the truck a little bit. I think it's just natural in this environment and where valuations are for investors to be a little jumpy. Doesn't mean that the underlying fundamentals haven't continued to come in strong. And thinking about NVIDIA later this week, you got to wonder, what is the PE multiple that investors are going to be willing to pay, even in the face of continued strong fundamentals? It's not like these companies are non-earners per se. It's not that kind of a worry. It's just a question of where valuation multiples go from here and where the return on invested capital really starts to materialize. We just haven't seen a lot of that yet.
Okay, so if that's one of the areas of concern, how are you thinking about Iran right now? A lot of noise is being made over tariffs, about AI. Is the market pricing in enough of what you describe as the most significant near-term geopolitical risk?
No, I don't think the market's pricing it in at all, to be honest. I think it could potentially be a shock to the system depending on how this plays out. Markets tend to get nervous around geopolitical events in the short run. It creates a decent amount of short-term volatility, but then once the market kind of figures out what's going on and what the catalysts are, aka we don't move towards a place where energy policy sanctions as it relates to energy become sort of weaponized, the market tends to be able to move on from it. And so, I don't know how this is going to play out. It doesn't feel like there's a bluff here. It feels like this is real. But I don't think the market has really sussed out yet what the path forward and the implications are. To the extent that energy policy is in the crosshairs on this, I do think that the market will see a pretty big reset. And we've seen global energy prices start to, incorporate a risk premium around it. But we're just going to have to see how this plays out.
There's something that feels weird to all of this, Amanda, in that these are big risks we're talking about. We're talking about Iran, U.S., and fears over their nuclear capabilities, AI completely disrupting companies and an American workforce, tariff uncertainty with businesses being hung in the balance, uncertain of what to do. And yet this is an equity market that has seen an extremely tight trading range. The headline level has been going a whole lot of nowhere. Amanda, is that going to change, or is this just the world we live in? Churn underneath the surface and calm on the top?
Well, it's a great question. I wish I had a perfect crystal ball answer for you. I wouldn't be on this show if I did. But a lot of the things that you're raising are obviously existential, and I'm not trying to make light of them at all. But you're right. The equity market has been chill. Even though I may not be chill, the equity market has been chilled to a lot of these existential concerns. I think it comes back to the underlying fundamentals, though. If you look at the strength of earnings growth as a function of Q4 earnings season, as 2025 is playing out, even as the forecast for 2026 is projected, we're seeing a decent amount of momentum and underlying fundamental strength. Profit margins are at all-time highs. And so that does give the market a little bit of shock absorber to deal with some of the headline news to the extent that it goes against us. It's not the fix. It's not, foolproof or the silver bullet here. But I think that has been really the foundational support that kept the market engaged so far this year.
Do you think that there still is support for this bond market, for that to act something as a haven, even if there are now concerns about expanding fiscal deficits, if there are tariff refunds to come for what companies paid in 2025?
The bond market, I have been joking, is sort of the adult in the room. The bond market's not giving policymakers a lot of room. If you just look at the shape of the yield curve, we've seen the policy rate come down a lot, but the 10-year to 30-year portion of the curve kind of goes in the opposite direction. It's pushing up. And that's really a reflection of deficits and debt levels in our view. Between last year and this year, it's sort of the first time in observable market history where we're seeing the bond market say, Houston, we have a problem. I don't know that it, leaves investors with, cause for concern or cracks here. I think there's still very attractive yields. Credit spreads look pretty tight here. So I don't see big cracks forming here, but the bond market is definitely not cheap at these yield levels.
Amanda, this has just been so excellent. Thank you so much for joining us to kick off a week of, I guess, uncertainty. What else can we call it? Amanda Agati, Chief Investment Officer at PNC Asset Management Group. Let's get a check on markets as we do kick off the week. And we are lower this morning. We had kicked off the trading day in the green. That starts to fade. We get more Truth Social posts coming out from this president being forceful about tariffs, his ability to implement them, and pushing back on other countries like the EU have now frozen the approval process. But it is a lot of uncertainty for companies. It's been the word of the past 2 years. We are down 0.6% for the Nasdaq. 0.75% is how we fall. 10-year yields, they do get a bid this morning, with yields falling nearly 3 basis points. Some of the single stock movers this morning, Novo shares, they are slumping after its obesity drug CagriSema failed to match Eli Lilly's Zepbound in a trial. Lilly share rose. Merck splitting its main pharmaceutical unit into two as it prepares for the approaching patent expiry of its best-selling drugs. Gilead agreeing to buy cancer biotech firm Cellex in a deal with an equity value of up to $7.8 billion. Coming up, a powerful winter storm could shatter records across the East Coast. More on a look on that and what else is making headlines around the world. Stay with us. This is Bloomberg Open Interest. Let's get to high interest, a look at what's making headlines around the world. Central Park is buried under 15 inches of snow as a major winter storm slams New York City. Mayor Zohran Mamdani declared a state of emergency, shutting down roads, bridges, and transit. Flights are canceled across the region. Officials warn of blizzard conditions, strong winds, and possible coastal flooding, urging residents to stay home. After Millennium pulled funding from their prior venture, some commodities veterans are back, and they are aiming to raise $1.4 billion. Lace Finemore and Al Fullerton launched Morton Capital, targeting $1 billion with an AI-driven commodity strategy. Despite cooling returns, investor appetite for commodities is heating up again. And the European Parliament is freezing ratification of its U.S. trade deal. The bloc is demanding clarity after President Trump's new 15% global tariffs. The move follows a Supreme Court ruling limiting his emergency powers. Meanwhile, the president on Truth Social warning countries not to, quote, play games with the Supreme Court decision. In the last hour, I spoke to the chief tax writer in Congress, Representative Jason Smith, who chairs the House Ways and Means Committee. He had this to say about tariff refunds.
I think it's very certain. There's probably not going to be any refunds. I don't see a pathway in Congress that there's going to be refunds. And so you're going to look at over the course of President Trump's administration, he's going to continue to use those tariff revenues to bring down the deficit.
Let's bring in Brendan Murray, who helps manage Bloomberg's global coverage of trade and geoeconomic statecraft. First off, Brendan, it's been way too long, so I'm so pleased to have you on the show today. Where do we stand after both the Supreme Court decision and Trump's 10 to 15% level of tariffs? So what is the current tariff regime in the U.S.?
Well, that 10% tariff kicks in at midnight tonight, and the president threatened another 5%, hiking up to 15%. We haven't seen the official paperwork on that 15% yet, but we would expect that would come any day now. The issue for the president is, as we've seen in the European Union, is whether these trade deals start to unravel. The European Parliament is saying we need to take a pause and check out the details, get some clarification about what this means for the terms that we've already agreed to. And the question is, what other countries could do the same? Will this new tariff regime that the president is rolling out, will that take some more time for countries to understand how it will affect them and essentially send the two parties back to the drawing board?
So we've heard from the EU about this freezing of a ratification process, but Brendan, what does that actually mean? What are the details?
Well, the Europeans still have some work to do to implement their end of the U.S. deal that they've signed. This has been a big bone of contention with people in Washington like the U.S. Trade Representative Jamieson Greer. They've been putting the pressure on the Europeans to say, hey, you need to work through your bureaucratic system to get it over the line. But that's taken some time. And now it looks like it's going to take even more time. And it's just a matter of how much more of this the Trump administration can take. It didn't look like he specified the European Union in any of these recent Truth Social posts over the past hour or so. But that's exactly who he's targeting these at. And the Europeans will have to see how he could respond to them now that he doesn't have that immediate tariff cudgel that IEEPA was for the past 10 months.
And then it goes down to the companies, Brendan, the ones that have seen tariffs and now are confused, that have sued. that maybe we'll get refunds, maybe we'll not, in a long, drawn-out process. What does that process look like for companies to understand exactly whether or not that they will be issued tariff refunds?
Yeah, it's going to be a messy one, as Brett, some of the justices wrote in their opinion on Friday. This is going to be, we all know what it's like to file our own tax returns with the IRS, and that can be a complicated process where you need professionals to help you out. And just imagine if you're a company that is importing millions of dollars worth of products and thousands of different shipments, and trying to account for those and account for the tariffs that you've already paid for those, and then try to go back to the Customs and Border Protection Agency and say, hey, you owe me that money that you collected illegally. It's going to be a real difficult thing to do. And as you've heard from the Trump administration and some Republican members of Congress, it might not even be possible. It might just wind up in courts for the next couple of years.
Well, there had been some op-eds, a lot of digital links billed, that maybe this was a gift to the administration, that with concerns about affordability, the best thing they could do was accept the ruling for the Supreme Court, not place on additional tariffs. That's not the reaction we've necessarily seen from this White House. But Brendan, what about Congress and all the individual members agreeing to go along with this when they do face midterm elections where affordability has been an issue?
Well, this is going to be the interesting thing to watch at the State of the Union tomorrow night, the level of applause or lack thereof when the president makes his case and doubles down in a lot of ways on his tariff program. He has said in some posts online today that he feels even more stronger that the Supreme Court may have struck down the IEEPA part of his tariff program, but that he's got all of these other authorities that he's going to use in a robust way. So far from being curtailed in his use of tariffs, President Trump at least sounds like he's going to go even harder. Now, as you said, the new authorities that he has will allow him to do so at a slower, more methodical pace. So maybe that will work to his advantage. But at the moment, all we're hearing is tough rhetoric, and that tariffs are going to get even worse for America's trading partners.
Brendan, thank you so much for this update. It has been far too long, my friend. That is Bloomberg's Brendan Murray. Still ahead, corporate America reacts to President Trump's new tariffs. We're going to speak with the CEOs of Mazda North America and Freeport-McMoRan. That's later this hour. You are watching Bloomberg Open Interest. Just out under an hour into your trading day, a check on your equity market. We are down 0.6%. The breath decisively to the downside. 345 stocks trading lower. On the upside, at least we have NVIDIA. Will it come save us on Wednesday when they report earnings? Shares are up 1%, followed closely by Apple. Eli Lilly beating out, or rather Novo Nordisk losing to Eli Lilly in a recent study of one of its obesity medications. A lot of the safety kind of stocks are doing well today. Energy is doing well too, with the Supreme Court reviewing their climate cases. Microsoft, that's one of the big losers. I do want to point out just what some of the credit card companies are doing. MasterCard, Visa, American Express, all down really sharply. An excellent research piece from Citrini Research envisioning what the future will look like in 2028 with AI. It's selling a lot of concern for those credit card companies like DoorDash. Again, a really solid piece of research. Let's look at some of what the sectors are doing this morning. It's a safety feel to this market. Consumer staples, utility, healthcare, all those doing better. To the downside, financials, again, this is off of that Citrini Research, down 2.5%, and consumer discretionary also falling this morning. Coming up, Mazda launches its all-new CX-5 as new tariffs and global volatility cloud the outlook. We're going to be speaking with the CEO of Mazda North America. That's coming up next. This is Bloomberg Open Interest. Mazda is among the global automakers facing renewed pressure after President Trump announced a new 15% global tariff. Against this backdrop, the company is rolling out the all-new CX-5, a key model expected to power its next phase of growth as it navigates volatility and uncertainty. Joining us now is Tom Donnelly, CEO of Mazda North America. Tom, I don't envy you at all. A great and beautiful car, but such a confusing environment. How do things change for you after this weekend and Friday's events?
Yeah, thanks. First of all, good morning. Yeah, it's a dynamic time, but I would say we've developed muscle memory over the last 4 or 5 years with all the shifts that have happened in geopolitical and economic things like that. The news from Friday with the Supreme Court ruling, it's a big development, clearly. But in terms of the big impact for automotive anyway, it's the Section 232 tariffs, which are still the primary impact. So what the IEEPA tariffs that came down on Friday in terms of the automotive impact for us, it's about 5% of the overall impact that we're faced with the Section 232 tariff. So as we continue to work through that, working with the administration, our various industry associations, we're really focused on what we can do to try to make adjustments there as well.
How much flexibility do you have to absorb any incoming costs versus passing them on?
Yeah, it's decisions that we've been making over the last 6 to 9 months. For instance, we've been working very hard to ramp up our production in our Alabama plant where we build CX-50. So CX-50 is built specifically for the U.S. market. We have about 120 to 130,000 units of production capacity there right now. We're trying to accelerate to 150, which is about the ceiling of our production capacity there. We feel like we'll be there right around the end of this year. So that model is performing well. We are gaining double-digit sales volume year over year. So we're optimistic about that. And then you mentioned the new CX-5. We feel like in terms of the outlook for this year, that's going to be a nice shot in the arm for us. It's our best-selling model. So we're really optimistic about the outlook for 2026.
You mentioned your Alabama plant that you're ramping up capacity and output there. Are you looking at broadly expanding it? Are you going to be investing more in that plant?
It's on the horizon for consideration, but as I said, we have about 20 to 30,000 units of capacity that we're looking to try to optimize in the next 12 to 15 months or so. So we feel like that's our near-term priority.
Well, there's also the Mexican-made Mazda 3, starts at just under $26,000.
Right.
And that's also something that faces tariffs, too. What does the strategy look like for that car, Tom? I'm assuming you're probably losing money on selling that car at such a cheap price point.
Yeah, it is a challenge. And so we've made some decisions there. So we build both Mazda 3 as well as CX-30, which is our small CUV. And in an industry where the average transaction price is north of $50,000, trying to find affordable options for consumers is really important. And frankly, you mentioned Mazda 3. Over the last 3 or 4 months, we've been able to gain double-digit sales month over month with our Mazda 3. And one of the reasons for that is we switched our production from Mexico to Japan, where we have a different level of tariff impact there. So that becomes more profitable for us, but it also allows us to increase our production capacity and provide more options in that 25 to, let's say, 35-ish range for consumers, where there is a lot of interest and demand in the market right now.
Where does demand stay for EVs, Tom? You've pushed out your next EV to at least 2029. You're leading into hybrids. Well, what's driving that? Is it demand? Is it economics? Is it policy risk?
All of the above, right? So we've been what we call an intentional follower in terms of BEV transition. So we have hybrids, as I mentioned earlier, with our CX-50. So we have a solution there. We have plug-in hybrids with our large platform products. And the next generation of CX-5 that we're introducing now will also come in a hybrid in about 12 months. That's really where the market is right now. We're seeing solid demand and acceptance of hybrid powertrains, and our plug-in hybrids represent about 10 to 15% of our sales mix in our large platform products. So that's where the market is right now. The BEV demand is 8 to 10%. So we feel like we're making the right call in terms of powertrain based on consumer demand here in the U.S. market anyway.
Hey, Tom, I'm going to do my best Matt Miller impression here because he is the car expert. He knows about everything. But a conversation I've had with him is this idea of cars that become over-engineered. I was looking at the CX-5, and it looks so slick, the center console, kind of like a big screen.
Right.
I just wonder why you decided to go down that route and not put buttons, not have tactile things. Like, did you confront this concern of over-engineering of the car?
Yeah, great question, and a question that we have gotten a lot, but I would say it's based on our owner feedback and where the market has gone overall. So with CX-5 specifically and the HMI system in there, there are multiple options. So there's the touch of the screen. There's also a very intuitive voice command, as well as steering wheel controls. So we feel like that provides the flexibility and the usability that will allow consumers to interface with it in the way that they choose.
Hey, Tom, we're going to have to leave it there. Thank you so much for joining us this morning. We appreciate your time. Tom Donnelly, CEO of Mazda's North American operations. Let's get a check on your equity markets over an hour into your trading day. And we continue to fall. We are at lows of the morning as companies like Tom try to assess what the new tariff regime and outlook looks like. Do you get refunds? How much uncertainty is there? And how much more waiting will there be? We're down about 0.8% for the S&P. NASDAQ falls more than that, down 0.9%. Maybe NVIDIA earnings on Wednesday will save us all. That feels like a lifetime away, though. Bonds are getting a bid. It is that safety haven still come alive, down about 3 basis points despite concerns about fiscal deficits if we are getting funds from tariffs. A look at some of the other movers on our radar this morning. Domino sales topped estimates as budget-friendly prices lured consumers. And this one's super interesting. DoorDash and American Express led declines in software and payment stocks on Monday. There was a Citrini Research published an article detailing a hypothetical scenario on the impact AI could have on global markets and the economy. It literally reads like a book, like a thriller novel. It is so good. I highly recommend giving that a read. American Express down 7%. International paper, that is falling as the tariff developments likely mean less demand for packaging. A recent industry report also highlighting lower demand. Coming up, gold extending its weekly gains as trade uncertainty hurts the dollar. We're going to get more on metals and mining at the BMO conference. Kathleen Quirk of Freeport will be joining us. That's coming up next. This is Bloomberg. BMO CEO Darryl White speaking exclusively with Bloomberg at his firm's Global Metals, Mining, and Critical Minerals Conference, with industry leaders speaking as shifts in U.S. trade certainty are renewing market uncertainty. You can see that in equity markets this morning as they fall about 0.7%. Joining us now from that conference in Hollywood, Florida, is Freeport-McMoRan CEO Kathleen Quirk. Kathleen, thank you so much for joining us. And I feel like that conference probably got a whole lot more interesting after Friday and the weekend's events. Of course, when it comes to tariffs around copper, that's Section 232. So I just wonder, with the use of IEEPA being ruled illegal, now 10% and 15% tariffs across the board, does it materially change Freeport's business at all?
It doesn't really change our business that much. We're really focused on copper, and copper was part of the 232, as you mentioned, which wasn't affected by Friday's decision. But we're following it all and watching it unfold. But what we're really focused on as an industry, and Freeport specifically as one of the world's leading copper producers, is finding ways to grow our copper production, invest in things that will allow us to improve our copper volumes at a lower cost, generating higher margins, and returning cash to our investors.
How disruptive for that goal has the back and forth on trade policy been for things like capital planning?
Well, it was at heightened levels last year at Liberation Day, and since that time things have settled down a bit. I think more and more we're looking long-term at our business, looking at the resilience of our business under different scenarios. And so we've really been able to make some decisions about long-term investments. There was a period of time after last April where there was a lot of confusion, but things have settled down, and we're now in a mode where we're focused on growth and how we're going to build our copper portfolio, because as we look at what's happening in the world that we're in today, copper is becoming so much more intensive in the global economy. And you've seen it in electrification, you've seen it in the data centers, you've seen it in what needs to be done in order to power those data centers in terms of the electrical grid. So we really need to get to work in the copper industry and make investments that are going to allow our copper volumes to grow as we go forward.
You've also seen that impact in the price of copper. It hits a record in January. It's been hovering around those levels. What's your expectation as to where it goes from here?
Well, the fundamentals of the copper industry are very strong. The demand drivers that we talked about dealing with electrification are solid. And at the same time, there are limitations on new supply development. So what we see over the next several years is a scenario where the fundamentals of the copper business are very supportive. Now, it's a commodity. It'll move up and down. Macro sentiment plays a role in it. But when you look at the underlying fundamentals of the copper industry, what it's used for in the global economy, the intensity of use that's increasing in the global economy, we think copper is one of the better positioned commodities of any of the commodities that we follow.
In order to grow, in order to capitalize on that, Kathleen, are you looking at more acquisitions? Should there be more consolidation?
We always look at that as an alternative. We would love to do any deal that would be value enhancing to our shareholders, especially deals that would allow synergies. But at Freeport, we have a portfolio of organic growth that we're pursuing as well. So the acquisition opportunity would be more opportunistic. Our base case is to invest in profitable long-term growth, and we have a significant opportunity to grow our business in the U.S. as America's copper champion. We have the potential to grow our U.S. copper production by 60% by 2030. We have a major project in Chile that we're pursuing that will grow our production there. And we just signed an agreement in Indonesia to extend the life of our operating rights there, which will open up new horizons for us for investment in Indonesia. So we have a very attractive organic growth opportunity within Freeport, but we're always looking at opportunities that would enhance shareholder value, and that we could do something more transformative in M&A, particularly in copper, is where our focus would be.
Kathleen, this is also a president who is planning to stockpile critical minerals like copper through its Project Vault initiative. Is Freeport having any discussions with the administration? Would you play a role in that project?
Basically, all the copper that we sell is sold to our customers. We supply 70% of the copper that is produced domestically in the U.S. Freeport supplies 70% of the refined copper in the U.S., and that's consumed by our customers who are using copper in their downstream markets and using copper to support the domestic economy. So at the moment, we're not involved in any sort of stockpiling of copper. We're selling it to consumers who are using it to go to work to make our economy stronger and more innovative when it comes to data centers and AI.
Do you support then this idea of the U.S. stockpiling critical minerals like copper?
I think the industry, the governments around the world are concerned about security of supply, particularly for critical minerals that are needed for economic growth in the future. So strategically, over time, historically, there have been stockpiles of strategic reserves of various commodities that have taken place. And so that's really gets into government policy. And what we do as an organization is try to produce the metal safely, efficiently, the most cost effective that we can, and reliably to bring to the market.
Kathleen, thank you so much for joining us from the BMO conference there. Kathleen Quirk of Freeport. Coming up, things haven't been this bad for private equity since 2008. It's a report from Bain, one of the most read stories on the terminal this morning. We're going to have the details coming up next, just on the other side of this break. The world of private capital. In private equity, the industry has returned fewer profits to investors for a fourth straight year, as it sat on nearly $4 trillion of unsold assets. That's according to a new report by Bain. Let's discuss with Allison McNeely, who covers private equity for Bloomberg. And Allison, I mean, you know this topic better than anybody. You've been reporting on this freeze happening in the industry. I think one of the more interesting things is just how the rut is more severe than it has been in their statistic of it being one of the worst since the 2008 financial crisis. So what does the industry do from here?
So the industry is going to need to show some stronger results pretty much across the board. What we saw out of the Bain report is that essentially private equity saw its fourth straight year of weaker fundraising, weaker distributions to investors, and overall just a harder time selling assets and generating returns. So going forward in 2026, 2027 and onward, the industry is really going to need to show a sharper pace of exits and of growth in order to sort of see a rebound to the levels that we saw. I mean, 2021 was really an outlier year because of COVID stimulus, but even to sort of get back to some of the higher levels we saw around that time period.
Well, and so many people have talked about M&A coming back this year, being led by private equity because of what you're describing, Allison, the need to exit investments. That doesn't, though, necessarily sound like a healthy environment. It sounds like, I don't know, more forced exits. Are people going to be able to get the price that they want as they try to return capital to their LPs?
Well, I have to tell you, I've been covering private equity for about the same time as the downturn has been happening. And every year around this time, I hear from folks in the industry, this is going to be the year. Deals are going to come back this year. Things are going to get better. But really, so far what we've seen is, despite the pressure to return capital to investors, managers are very reluctant to sell assets for less, than what they paid for them. And so far, those investors, despite their sort of grumbling and frustration, they've been willing to give them time. They sort of say, hey, that's the benefit of private equity, right? You can hold on to these assets for longer and wait for the rebound in markets. But, as ever, the question becomes, when are LPs, when are investors in these funds going to say enough is enough? I'd rather you sell something, even if it's for a little bit less than you might have hoped, because I need to get my money back.
Well, it's stress from two sides. You have the institutional investors doing what you're talking about, Allison, and then they've all been making this retail and wealth push. I wonder how complicated that is getting now with the recent missives over Blue Owl. That anxiety, of course, that's credit, not necessarily equity, but all these private credit giants also have some sort of private credit arm to them. What sort of angst is that causing in the industry right now?
Yeah, the Blue Owl headlines have been huge. What we're seeing there is, honestly, in some senses, an echo. It's not the same situation, but recall a few years ago, Blackstone had to halt redemptions on one of its real estate funds due to investor jitters. And we're now seeing that come up again. So that halting of redemptions with some of Blue Owl's credit funds for retail investors. And that's really notable because we have seen so many of these managers go into private credit really aggressively in the last few years because private equity has been slower. And because these are large, diversified alternative asset managers that are always looking for new ways to put capital to work and also new ways to bring in retail investors. So while the private equity house and the sort of institutional capital side of the house has perhaps been a little bit slower over the past few years, retail and private credit has been a relative bright spot. And now that part of the market as well is coming under a bit of pressure with this Blue Owl news and people sort of saying, hey, are these private credit investments, really as safe as what we thought? Are they really worth what we thought? And those questions, I think, are still unanswered for some people.
And those kinds of questions when it comes to retail money, especially, Allison, often get the attention of policymakers. Democratic Senator Elizabeth Warren talked about shadowy private credit. Is this an industry that's also bracing for more regulation?
I mean, certainly that is an ongoing question if there needs to be more regulation in private markets in general, whether it's private equity or private credit. And, now that we're seeing all of these asset managers push towards the 401k market, which certainly President Trump has been encouraging through his executive order, when you have these kind of lockups in the market and investors can't get their money out, it does raise questions like, do we need more regulation? Do we need more transparency, more oversight if we are going to be putting regular savers into these products, whether that's through like a wealth channel BDC type product or a 401k.
Hey, Allison, thank you so much for this. We appreciate your time on this snowy morning in New York City. Bloomberg's Allison McNeely. Let's get a check on your equity markets as we head to the end of the hour. We're at the lows of the morning, down almost 1% for the S&P. NASDAQ falls more than that, 1.2%. It's a busy week. We have the State of the Union tomorrow. We also have NVIDIA earnings. And we have talks going on with Iran and the U.S. 10-year yields falling by 4 basis points, getting a real bid to safety. Coming up on tomorrow's show, we have Goldman's Kathleen plus the CEOs of Samba and Baker Hughes. Some excellent conversations to come. This has been Bloomberg Open Interest.